All right, let's talk about one of the biggest questions you face when you decide to start building wealth, investing. If you've ever felt kind of stuck, wondering if you should be buying individual stocks or maybe putting your money into mutual funds, well, you are in the right place. We're going to break it all down really simply.
So here's our roadmap. First, we'll cover the big why you should even invest in the first place. Then we'll get into what stocks and mutual funds actually are, put them side by side, and then wrap up with how you can create a real plan to get started. Sound good? Let's dive in.
Okay, so first things first. Before we get into all the nitty-gritty of how to invest, we have to talk about why. Because honestly, investing isn't really about complicated charts and numbers. It's about building the future that you actually want.
I think a lot of us start from a place of feeling a little unsure about our financial future, right? Well, investing is the bridge. It's the thing you build to get yourself from that feeling of uncertainty all the way over to your biggest goals. It's how you take the wheel.
And that's really the heart of it. It's a total game changer. Instead of you having to work for every single dollar, investing lets your money start working for you, earning more money all on its own. That shift in thinking is everything.
So when you boil it all down, investing does three really critical things. First, it helps you beat inflation. You know, that silent thief that makes the cash in your savings account worth a little less every single year. Second, it's how you genuinely create wealth over the long haul. And third, it's how you hit those huge, meaningful life goals, like buying a house, paying for education, or, the big one, having a comfortable retirement.
Okay, let's look at path number one. This is probably the one you hear about all the time on the news, buying individual stocks.
So what is a stock, anyway? It's a surprisingly simple idea. A stock is just a tiny little piece of ownership in a company. So when you buy a share of, say, Apple, you literally own a teeny tiny fraction of the whole company. If Apple does well, the value of your little piece can grow right along with it.
You know, a really good way to think about the stock market is to picture a giant supermarket. But instead of grabbing milk and eggs, you're shopping for shares of different companies. The market is just the place that connects all the buyers and sellers together. Simple as that.
But just like anything, there are two sides to this coin. The upside, the potential for massive gains. This is how you find those rocket ship stocks that can make you a lot of money. And you are in complete control. But the downside is just as real. That control means you also have the potential for huge losses. And it takes a ton of time and research, and honestly, it can be a real emotional roller coaster.
Okay, so if buying individual stocks is kind of like a high-stakes solo mission, our second option is all about teamwork and spreading out the risk. Let's talk about mutual funds.
So a mutual fund is basically a big collective investment. It pools money from thousands of people, maybe just like you, and then uses that giant pot of cash to buy a whole basket of investments. We're talking hundreds of different stocks or other assets. So you buy just one share of the fund and boom, you instantly own a tiny piece of everything inside that basket.
And this is why mutual funds are so attractive, especially for beginners. The number one most important benefit is instant diversification. See, since you're not betting everything on just one company, if one stock in the basket does poorly, it doesn't sink your whole ship. Plus, you get a professional managing it, and it's super accessible, even if you're just starting with a little bit of money.
This right here is one of the biggest selling points. Instead of you having to spend your weekends buried in company financial reports, a professional fund manager and their team do all that digging for you. It's their full-time job to do the research and pick the investments that fit the fund's strategy.
So now we've got two very different approaches on the table. You've got the focused, high-risk, high-reward bet on a single company versus the broad, diversified, managed approach. So how do you possibly choose between them?
This is the question, isn't it? It's at the heart of everything we're talking about. Which of these paths is the right one to start your investing journey? Let's really break it down.
This table really makes the trade-offs crystal clear. Look, with stocks, you get complete control, but that comes with high risk and requires a lot of effort from you. With mutual funds, you give up some of that control, but in return, you get much lower risk and it's way less effort, all thanks to that instant diversification and professional management. For most people who are just starting out, the path on the right is usually a much safer and, frankly, smarter way to begin.
So here's the big takeaway. The best investment isn't actually about stocks versus funds. It's about you. The choice you make has to be driven by your personal goals and your own financial plan.
I love this quote because it just hits the nail on the head. It is so tempting to chase after the hot stock or fund that you keep hearing about.
But a disciplined strategy that's built around your specific goals will almost always be just chasing trends in the long run.
And a good plan helps you avoid all these common traps. Things like trying to time the market's ups and downs, which is basically a losing game, or investing without even knowing what your goal is. A plan keeps you from making these kinds of mistakes.
So here's a much smarter game plan. First, define your goals. Are you saving for retirement in 30 years or a down payment in 5? Those are very different things. Second, be really honest with yourself about your risk tolerance. Third, find investments that actually match steps 1 and 2. And finally, and this is so important, think long-term. Let your plan do the work and just ignore all the daily noise. At the end of the day, investing is a personal journey. It's not about finding the single best investment in the world. It's about finding the right strategy to build the future you want. So the real question is, what's the first financial goal you're ready to start planning for?